Well, it's a shocking number, 338%. That is the interest rate certain lenders are putting on quick cash for people here in Wisconsin.
And today we've learned that exorbitant rate is among the highest in the country. Rebecca Clough goes in depth on how these loans force people into crippling debt and the push to cap the rates.
Payday loan businesses are all over the country. There are about 23,000 open right now. That's almost double the amount of McDonald's open across the nation. For people who want a quick loan with only a few documents, they don't have to go further than a payday loan or a check cashing store. One man we spoke to who didn't want his face shown says he prefers to use these types of businesses over banks, though he doesn't get any loans from them.
They give you good support, good service. You name it, they do it.
Another man we spoke to who wouldn't go on camera says he did get a payday loan and he would never do it again because the interest was outrageous. That's because Wisconsin doesn't cap the amount of interest a payday lender can charge. Only these 18 states and D.C. do. They cap payday loan interest rates at 36% or lower. So what does the average person pay when they borrow from a payday loan in Wisconsin? Well, if you need a $500 loan from a payday lender, Pew Charitable Trust found the average cost to borrow that money is nearly $400. That's an interest rate of 338%. So the cost of the $500 loan to you is $900. On top of that, 1 in 4 people usually re-borrow on a payday loan at least 9 times, according to the Consumer Financial Protection Bureau.
It's still at such an exorbitant level that you're taking out subsequent loans and really creating this cycle, this debt trap, if you will, that people are never able to get out from underneath. And it is predatory lending, plain and simple.
Republican State Senator Andre Jacques introduced a bill this year to cap the amount of interest payday lenders could charge at 36%. But that bill failed to pass before the end of the session. One of the groups advocating against caps for payday lenders, the Wisconsin Bankers Association. The association says it would like to see more regulation on the industry as a whole, but it's against any interest rate cap.
I don't believe that that is in anybody's best interest to arbitrarily set an interest rate on the loan.
Senator Jacques says if banks and credit unions can face regulations, why can't payday lenders?
My hope is that members of the public will reach out to their legislators to encourage them to sign on, to push for some sort of resolution, because there are a lot of people that have been hurt by this.
Senator Jacques says he will continue to fight for regulations for payday loan companies. He says in the meantime, if you get a payday loan, make sure you understand all the fees and the interest rates you are going to be paying. He suggests that you first consider a bank or a credit union. Reporting in Milwaukee, Rebecca Clough, TMJ4 News.
All right, you've seen the sticker shock of 338%. So let's compare. NerdWallet says that the average interest rate for a credit card is just over 16%. The same site says the average student loan interest rate is just under 6% in households with student debt.